Kitco Mining's special coverage of the Precious Metals Summit is brought to you by Newcore Gold.
Hello and welcome to Kitco Mining with me, Paul Harris, here at the 2025 Precious Metals Summit in Beaver Creek, Colorado. Joining me now is our sponsor, Luke Alexander, President and CEO of Newcore Gold. Luke, welcome back to Kitco.
Yeah, thanks a lot for having me.
It's been a year since we last sat here. A lot has happened in that year. But first off, we are at a mining investment show, so let's start there. Over the past couple of weeks, the junior miners and developers have really started to sort of take off, getting some wind in their sails. The GDXJ, which is one of the main indexes there, 52-week high, decade high, having doubled this year. Junior miners seem to finally be getting some investor interest. Would you agree with that?
Yeah, I'd completely agree. I mean, obviously we have the commodity cooperating, gold at all-time highs, silver at pushing all-time highs. So, in that kind of environment, you'd expect that, the stocks are going to start performing. I think the smaller cap companies have been lagging for a while. You've highlighted the big indexes, GDX, GDXJ. Those have big volume. They have multiple companies that are within those indexes. So often the money flows into those as well as the seniors before it starts to move down market as those companies and those indexes become more expensive. So yes, in the last few weeks, as people are getting back to their desks after summer holidays with gold hitting all-time highs, we are starting to see more money flowing into the junior sector, which is obviously a very positive for the overall sector.
What does your meeting calendar look like this year compared to last year? Is there more of one kind of company or entity that wasn't there last year?
Yeah, I'd say overall, this is probably the busiest I've seen it in the past 10 years. Compared to last year, without a doubt, it's much busier this year. Our schedule has always been full, regardless of whether it was last year or the year before. But this year, I'd say we're seeing a lot more institutional investors who are showing up, a number of new investors who we haven't seen in the past. So again, I think that's an indication that the broader market is starting to look at the sector again. And specifically here at the Beaver Creek Conference, this is a conference that does focus more on the junior companies, on either the exploration developers or potentially single asset producers. So the fact that we are seeing a lot more institutional capital at this conference, I think again highlights the demand that there is for companies at our stage.
Excellent. Well, your share price is up about 125% since this time last year. You've now got a market capitalization of 165 million Canadian. We're starting to see some larger financings in the space. You raised an upsized $15 million Canadian earlier this year. Who participated in that financing? Do you get new shareholders with that?
Yeah, so as you highlighted, we raised $15 million in February of this year. That was about 85-90% backed by deep-pocketed long-term institutional investors. Primarily the money for that specific financing came out of the U.S. And out of funds out of New York. So a couple of large institutional investors wanted to get access to Newcore, so we leveraged that into a $15 million financing. And I'd say, for Newcore specifically, on the back of that financing, we grew our institutional ownership from 45 to 55%. So we've got, institutional investors globally who are invested in us.
Now, you trade on the Toronto Stock Exchange venture market under the ticker NCAU, and also in the US under the OTCQX under the ticker NCAUF. What sort of volumes do you get on each one? Are you starting to see more volumes in the US market?
Interestingly, in and around when we did that financing, we actually saw a meaningful spike in the amount of volume coming out of the U.S. I'd say as a trend overall, we've been seeing more volume in the U.S. than we have historically. As a split, it's typically about 80% still in Canada, about 20% traded in the U.S. the interesting piece is you can look at volume in two ways. You can look at volume in terms of the number of shares traded, but you can also look at it in terms of the dollar amount traded. So our volume has steadily been increasing over the past year, but that's also at a steadily or at a higher gold price. So the amount of dollars that are trading on a daily basis have also meaningfully increased, as well as the volume. So those are both, again, very positive indicators for Newcore and for our shareholders.
And what does your sort of capital structure look like today?
So we've got 250 million, roughly 250 million shares outstanding. Again, 55% institutionally owned. It's also important to highlight that management and board, we own 15% of Newcore. That's money that we've invested alongside investors over the last number of years. So we're truly aligned with shareholders from that perspective. We then have about 20 million warrants, about 28 million warrants outstanding. About 8.5 million warrants are coming due in the next 2 weeks. So between now and September 26th, that will bring in about $3.5 million. And that is obviously basically an embedded financing for us. In terms of cash on the balance sheet, if you look at our last reported cash, end of June, it was $10 million. So add $3.5 million to that, we should be sitting around $13.5 million. Beyond that, we then have those additional 20 million warrants. Those come due between now and February, so about 5 months from now. So we're very well cashed up to execute on everything we want to do. And then those warrant proceeds will allow us the flexibility to potentially increase the overall size of our drill program, as well as we move to PFS and then FS, ultimately fund some of that future work that we're looking to get completed.
Now, you've got a big drilling program underway, which we're going to talk about in just a moment. Before we do so, is it getting easier to raise money? And when do you think you'll need to raise again?
Yeah, I think it's definitely gotten easier to raise money. I mean, if we look at, typically investment banking 101 would be don't raise money in July and August because people are summer vacation. This July and August, I saw more financings than I've seen in, the last number of years combined. So I think that highlights that the window is open to ultimately finance. I think one of the things we might have talked about, last year on this show is that can ultimately be a double-edged sword, because there's projects today that are getting financed that should not have, would have never had a chance to get financed a year ago and probably still shouldn't be getting financed today. What that does is it takes capital away from the better projects. So, it's a bit of a double-edged sword. For us, again, we've got a great institutional shareholder list. We have a ton of support. We don't need capital, which is another one of the advantages. So we don't have a kind of cap on the stock where everyone's waiting for a financing to happen. So our stock can ultimately run without that, potential pressure of a future financing coming.
Okay, well, let's talk a little bit about where you're spending money and how you're spending those funds you had. Last year, you put out a PEA on the Enchi deposit in Ghana, in West Africa. You have a 35,000 meter drilling program underway this year. Where are those meters going? What are you looking to do and achieve with those meters?
Yeah, so of that 35,000 meters, we've now released results for 25,000 meters, 207 holes. I'll call that the phase one part of our drill program. A lot of that phase one drilling was focused on resource conversion, so taking ounces from the inferred category, moving them into the indicated category, so tighter drill spacing to increase the confidence in the resource. That's one of the key, if not the most important element of moving from PEA to PFS is that de-risking of the ounces.
Enchi.
That's at Enchi. Yep. De-risking the ounces in the ground. So we've been focused on that. Based on some of the internal work we've done, we think we've now completed enough drilling to convert the ounces that we want to convert to get to, or to be able to complete our PFS. With the second phase, let's call it that additional 10,000 meters of drilling that we're going to be completing, we are focused on more pure resource expansion, exploration, your traditional exploration type drilling. If you look at some recent results that we put out from Kogina Hill, that would be a great example of some of the drilling that we're focused on with that expansion focus. Kogina Hill was a previously drill tested areas. We had historically drilled about 2,500 meters into it, made multiple discoveries in that area, but didn't have enough drill density to be able to wrap a resource around it. As part of this additional 10,000 meters, we went back to Kogina Hill, and we actually had our third best grade meter intercept ever on the project, 184 grams over a meter. Within that same press release, you'll see that we also hit just over 3 grams from surface over 10 meters. So that's a great example of, we will want to go back to Kogina again with some additional drilling, chase that high grade that we're finding, grow the overall mineralized footprint with the goal of adding that to our global resource over time. The other thing we're focused on, which we're really excited about and haven't had an opportunity to do in the last couple of years, is put some more deep holes into the project. If you look at these greenstone hosted deposits along the Sefwi-Bibiani belt and globally, where you'll see a lot of them really grow in size and increase in grade is as you start to identify these high-grade feeder zones. We've identified multiple high-grade feeder zones across our project, and we've now spent time prioritizing which ones we want to go back and do some additional drilling. So at the moment, we've got a diamond rig turning on site, starting to focus in on some of those high grade discoveries that we've made, and looking to add to the add to that drill density. And we think that that's something that ultimately, with success, can create outsized returns beyond moving from PEA to PFS. So there's a lot of optionality that's baked into Newcore for our shareholders.
Those Kogina Hill results you mentioned, you published those last week as the first week of September. Now, in terms of looking forward towards the PFS, the 25,000 meters at Enchi, that's going to go into a resource update, I assume. The drilling you're doing at Kogina Hill, will that be able to get into the resource update?
Yeah, we might be able to include that in the resource. I mean, today we don't have a resource at Kogina Hill. The way we've approached it, unless it's 50,000 ounces or greater, we don't think it's worth kind of adding to our global resource. So, we'll evaluate that as we continue to drill. We'll take the results that we just got, we'll model those internally and determine whether it makes sense to add that or not. It is important to mention, though, that all of our deposits do remain open along strike. So we will continue to also systematically step out near surface. We view this as lower risk exploration and look to grow the resource that way as well. We've also identified a number of parallel structures. So at our existing resource areas like Sium and Boeing, areas where stepping out we see opportunity to add ounces as well. So, lots of opportunity for us to grow the resource. And then, as I mentioned, we could have a real game changer with some of these deeper holes that we're drilling at the moment.
Now, the PFS, you're looking at putting that out in the first half of next year. How similar or different will that be from the PEA?
Yeah, so if you look at the economics of the PEA, I'd encourage everyone to go look at our presentation online, and you can see we've got sensitivities to the gold price. But let's use $3,000 gold price. That's what lots of people at this conference have been asking us to use. So at a $3,000 gold price, the PEA outlined an after-tax NPV of $970 million, after-tax IRR of 136%, and about a half-year payback. So very robust economics. Our view is that if we can replicate that within a PFS, that would be a major win for shareholders. So that's what we're laser focused on. That being said, we are looking at a number of optimization opportunities within the study. So as we lead up to the commissioning of the PFS in Q4 of this year, we're doing a bunch of different trade-off work to look at how can we, optimize what was done in the PEA. And that's something that we're then excited about including in the PFS, which again, we'll look to publish in the first half of next year.
I want to sort of follow up a little bit on the sort of gold price you use in studies, and not just you, the sector in general. When I speak to the business development teams of the big gold miners, they very much use, let's say, $2,000 per ounce gold price for the models they run when they're evaluating companies, when they're evaluating potential acquisitions. So are juniors doing themselves a disservice by using higher gold prices, $2,500 per ounce? Some are even using $3,000 per ounce now.
I'd say any business development team that's using $2,000 gold price today will not be having very much success. So those teams will be losing out on opportunities out there, because the reality is, if you look at the gold price today, we're starting to see studies come out at $2,500, $2,600. That needs to start to get properly reflected into projects, and business development teams will start to ratchet up their gold price assumptions that they're using. Otherwise, they're just going to be spinning their wheels at the end of the day. In terms of Newcore specifically, we obviously provide a huge amount of leverage to the gold price for our shareholders. One simple way of looking at it is, for every $100 increase in the gold price, we add about US $50 million to the NPV of our project. So we're adding roughly 40-50% of our market cap today for every $100 move in the gold price. Obviously, as we look forward and ahead to this PFS, that's something that we will need to evaluate, is what gold price do we use for our base case? What gold price do we use for our pits that constrain our resource? We have continued to see that ratchet upwards, and that's something that obviously we will do, as well as in a $3,600 gold price environment. As I mentioned, a lot of those trade-off studies have changed, the potential outlook relative to what we did in the PEA. So we'll look to incorporate a lot of that into the PFS and ultimately optimize it for our shareholders, but for all of our stakeholders at the end of the day.
I think you're illustrating just the leverage that's there with the gold price going up. Now, you're drilling 35,000 meters this year. Next year, obviously, the PFS. But in terms of exploration and drilling, what are the plans for next year? Are you starting to think about how you're going to follow up this 35,000 meters?
Yeah, so again, as we kind of highlighted, so all of the work that I've talked about, so far, that's all funded with the cash that we've got on the balance sheet today. So end of June, as I mentioned, $10 million. We then have an additional $3.5 million coming in between now and September 26th. The warrants are well in the money. We've started to have that money trickle in. Beyond that, an additional $10 million coming in February, assuming the stock price stays, above or around where we are today. So with that additional capital that's potentially coming in, and I'd say is coming in, especially with the September 26th money, there'll be an opportunity for us to expand our drill program. You could drill another 1 million meters on this project and still have an opportunity to keep drilling. It's a very large district scale exploration opportunity. We've identified 25 targets across the project. We've only drilled on 9 of them. The average vertical depth of the drilling to date is only down to about 125 meters. The pits that constrain our resource are only down to 80 meters. That compares to Toronto, our closest neighbor, which is mining at 800 meters below surface, had drilled down to 1.1, 1.2 kilometers. It would look very similar up at Ahafo as well, which is sitting at 20 million ounces, which is drilling deep holes across the project. So for us, we don't expect that we're ever going to stop drilling. That being said, we also are laser focused on going from PEA to PFS, because through that de-risking process, we think we can create a lot of value for shareholders and command a higher multiple from the market.
Now, you're active in Ghana, which is in West Africa. The mining news headlines have been, dominated throughout the last year or so. A lot of bad news out of Burkina Faso, Mali, in West Africa. What are some of the key differences between Ghana and some of these other jurisdictions where mining and exploration companies are struggling?
Yeah, so Ghana is Africa's largest gold producer. It's the 6th largest gold producer globally, just behind Canada and the US. I mean, if you go to any of the international groups that, monitor elections, you'll see that it's had free and fair elections for the last number of decades. So I think that's one major differentiator. The other thing I would highlight is look at the companies that are operating in country. You currently have 4 of the largest gold producers there. Newmont, Goldfields, Anglo, Zijin, all of them with significant operations. Newmont, the largest gold producer on the planet, is investing an additional $1 billion into Ghana to expand their Ahafo project and make it the second largest gold producer globally. So it's a great jurisdiction. You've got a government that wants to see projects get built. They recognize the importance for the economy, for the tax base, for jobs. It's the largest contributor from an FDI perspective. So for us, again, at Newcore with our Enchi project, when you look at that and our project, it is one of the 2 most advanced projects in the entire country. So with that, we have a tremendous amount of support from the government to move it, through the development path and ultimately into production.
Okay, wrapping up, Luke, we covered a lot of ground in our conversation, so maybe we can just recap on what some of the key catalysts for the company are going to be over the next 12 months.
Yeah, so probably one of the big catalysts is obviously PEA to PFS. Behind the scenes, we're doing geotech, hydrological drilling, we're doing additional baseline environmental work, so all of that work is happening in the background. We are now in that phase 2 of the drilling, which is really exploration focused, resource growth focused. So at any point in time, we could have drill results that create outsized return for shareholders. And then as we move into obviously 2026, first half, we are looking to get that PFS published, which we think could be a major catalyst for the company as well. So lots of additional drill results, and then the PFS we see as a major catalyst for the company, as well as through that period, the potential that we expand our drill program well beyond 35,000 meters.
Well, I look forward to seeing that. And once again, Newcore Gold trades on the TSXV under the ticker NCAU and on the OTCQX under NCAUF. Luke Alexander, thank you very much for your sponsorship and thank you for joining us today.
Thank you, Paul.
And we have a lot more to come from the 2025 Precious Metals Summit here in Beaver Creek in Colorado. So stay tuned and hit that subscribe button. I'm Paul Harris and this is Kitco Mining.
Kitco Mining's special coverage of the Precious Metals Summit is brought to you by Newcore Gold.